Okay, everyone, we are live. Let me tweet it out that we're live. Hope everybody's doing well. We are approaching the market open, or sorry, the market close, and it has been an interesting market. The market's been generally red today. Tesla's been doing well. I did some buying of some stocks that I thought were incredibly exciting to me. But overall, it was a pretty bad Friday. Emmanuel, my guy, what's up? Happy you made it, Brody. Get the Band-Aids. Oh boy, it's bad. It's a little rough, little rough. So let's get into what's going on right now with the market. Rocking that homeless Wiz Khalifa look today. You know, Chris, I'm having a bad hair day, and that's why I did this. John, what's up? GS, Gabe, what's up? Down days are exactly when you buy. I agree. Google's just 4 shares. Nothing that crazy today. I think I bought like $1,500 worth of stocks today. Chris, I made a position in DNA, and I think you're wrong about them. I think you are absolutely wrong about them, Chris. I don't know what short report you read. I mean, I know the short report you read because I read it, but I don't. It was just about accounting. It wasn't really about anything in the company per se that I saw that was bad. I've listened to a lot of interviews with the CEO. Hold on, I'm trying to pull up Webull. Okay, a lot of interviews with the CEO. Jason Kelly's a rock star, just like Anthony Noto, in my opinion. The dude. They've been developing this company since 2002, bro, or the technology from 2002, company from 2009. Going bankrupt, I do not think they are going bankrupt. I do not think they are going bankrupt at all. This is an exciting company. So let me show you guys the stocks I bought today. Let me pull it up on my phone. I bought 4.71 shares of Google, and my average cost basis is 101.53. So far, I am up 1.21% on my Google position. I bought like 5 shares of Palantir, I think, or 1 share. It's just whatever I had left. I bought 300 shares of DNA at an average cost of $292. So I'm up 0.85% on my position. This is DNA. I have a lot of content coming out about Ginkgo Bioworks. Sham is involved in 2 scam companies. Ginkgo's very unique. I think they are fundamentally misunderstood. I think they're misunderstood almost to the level that Palantir is misunderstood to an extent. They are a platform company. They are not a company that sells drugs or biotech drugs. They don't need a drug to work. They need their platform to work in order for drugs to work. And it's an incredibly complicated platform. So I'm excited for that position. I'll be talking more, making more content about that. I think about like 50 shares of SoFi today. So my average is 626 now on SoFi. And that's it. That's all the buying that I did. So there is that. I really wish you would write a put instead of buying shares. Yeah, but buying the shares was easier. So I just bought the shares. DNA is a high beta stock and crushes on up days. Yeah, that's the other thing about this. Just from a pure technical perspective, DNA is getting to a point where it's stupid. Like it's look at them on the RSIs. I mean, obviously the RSI is not the only indicator, but it's they are overbought or oversold. Even below 30 on the RSIs. Adobe has not recovered from yesterday, under 300. It's lost about $30 billion of market cap after spending $20 billion. So really buying this is like a $50 billion acquisition for Adobe until they recover. Obviously, it still needed to get done. You had to get Figma. I know a lot of people don't know what Figma is. I'm in the startup world, so I understand Figma. I know Figma. I've heard about them for a long time. They make design very easy. And if you're building a startup and you need to build out a user interface for a product, whether it's the enterprise or the consumer, they make it as simple as like Shopify to start a website. So those platforms that have that level of scale and distribution and user application to them, they go for heavy premiums, and they got a 100% premium. They were valued at $10 billion last funding round, May 2021, I think. I know they would do 10 billion. I don't know if it was May 2021, and now they're at 20 billion. They got sold for. Snowflake 184, down 6% today. UiPath down 7% today. And AMC at 912 down another 7%. Bitcoin under 20,000 comfortably, holding it at the 19K. So overall, rather red day for the market. Let's pull up a video that I wanted to show you guys, talking a bit more about, what are we talking about? We're talking about recessions and potential recessions that are on our way. So let's pull this up right here. Okay, the U.S. will experience a rolling recession, and we'll get into the market close in about a couple minutes.
Actually doing, and then make our investment conclusions based on that analysis. And it seems to me that they are committed to raising the interest rate significantly at this meeting next week. I do think they're going to come around and conclude that maybe just get it over with, maybe 100 basis points instead of 75 basis points, and then maybe one more hike after that. I mean, they know that monetary policy operates with a long lag on the economy, but they've got a credibility problem, and they're trying to get ahead of it. Actually, they're trying to catch up with the 2-year Treasury note, which is saying that within the next 12 months or a lot less, we'll be at something like 3.8%.
Steve, I've got a couple of my colleagues here, and Santelli's a little older than Leisman. But Rick, can you remember where both sides were so certain of and neither one is a good outcome, an economy on the precipice of a recession and a Fed that needs to go 1 to 2 points at a time? Both of those, they're polar opposites. I don't know if I need to say polar. They're opposites. Do you remember the last time we had this sitch?
No, it is a rather unique situation. And what makes it even more unique is, and I like what Ed said, and he probably doesn't remember, but in the 80s, we saw a lot of this. He was at Drexel, I was at Drexel. Things have definitely come full circle. But if you look at Fed fund futures right now, the November 22 contract all the way to Feb 24, all of those are making new contract low prices as we speak. 16 contracts, okay? So they're getting Powell's message loud and clear, and his message is hard to argue with. I can't imagine he's going to go less than 3/4 of a point. But the problem is, and Mr. Sterling had it to some extent, it's not housing. The Fed certainly knows that they were going to definitely throw grenades in the housing market. I think about Eurozone inflation just released, year-over-year CPI up 9.1%. The pound at the lowest level since 85, the dollar very close to fresh 20-year highs. It's the global recession that somebody needs to pay attention to, Joe, because the United States is big enough that we're going to leverage the rest of the world down.
That you, Steve?
I think that's absolutely right.
Oh, Ed, go ahead.
I agree. We got to look at the global situation. And global situation, we have a developing global recession. I think the United States is not going to experience a bad recession. I call it a rolling recession, which means different sectors get hit at different times.
Steve, you're still in I think, at least recently, you kind of think the economy is, not great, but not ready to fall off a cliff. So you're behind Jay Powell and a couple more, at least a couple more 75 basis point hikes. Could you change your mind in a data-dependent way?
Oh yeah, totally. I mean, I think the 75 is okay here. I think I follow the Fed and try to communicate what I think they're thinking and what I think they're saying, and I think they're saying they need to get to 3 3/4 to 4%. The market may be overdoing it just a touch here with the 4.5%. But look, Joe, this opposition to the Fed is perfectly fine as long as you come to the table with a different theory of inflation. Right. So Barry yesterday talked about the idea that he thinks it's okay for the Fed to stop at 3 to 4%. Of course, we'd be great to have that conversation, but we're not having that conversation yet. We had core go up in the last one. And that different theory of inflation seems to take two parts. One is that there's a lot to come down the pike here that has not been priced into the economy. The other is that there's a lot of data out there already showing that inflation is coming down. I have some sympathy with that. I also have a lot of sympathy with the idea that the Fed may be the last to know what's going on in the economy, given their adherence to the transitory idea. They kind of missed the financial crisis while it was brewing and had to turn around and do an about face or a huge rate cut. So I think there's some sympathy with that idea, but you have to come to the table. If you think the Fed should not go up, you've got to come with a different theory of inflation, of what's happening right now.
That's a really good point, right? Like, if you don't think the Fed should raise interest rates, then what is your different theory of inflation? Obviously, Kathy Wood and Elon Musk have a inverted theory of inflation, which is that deflation is coming with more rate hikes because they are seeing prices go down within the things that they're doing analysis for. The Fed is looking at other factors, right? And the Fed is saying, hey, we see things differently. I think next month's CPI is going to be really important. If we had gotten below 8.5, like in a substantial way this month, Kathy Wood and Elon would have been absolutely right. But everyone thought that was going to happen, and then it didn't happen, which makes me doubt the mainstream consensus around interest rates, around inflation just going away. So I think that's necessarily going to happen. Let's look at Wejo. Wejo is apparently mooning. Wejo is at, well, it's at like $1, but it's up 10% on the day, up 9.1%. It is extremely oversold, you could argue, being 16 on the RSI is well below 30. Wejo is an interesting company to me. I would, whenever I think about buying Wejo, again, I think of Palantir and how they already have exposure to Wejo. I don't know enough about Wejo's financials as much as I would like to. I understand the thesis of the company. I think the growth potential is there. I think they also are they don't have that much competition in the connected vehicle data space as one would think. And the stock price is what attracts me the most, being $1.16. I mean, like, that's just like cool. I just don't know how much growth they're going to have to get that to be bigger at one level. But Wejo is an interesting company. I bought a little today, 25K long-term hold for me. It won't surprise me that the market goes down another 10% or 20%. Big Al, are you saying little on Wejo, 25K, or just in general you put into the market? Don't worry, they don't either. Yeah, I love Wejo. I'm not sure exactly how. Like, I understand how Palantir makes money. I don't understand how Wejo makes money that much yet. But I think they're a great, innovative company. I think it's, they're a SPAC, and in this SPAC, you're gonna get, in this market, it's a bit rough dealing with. S&P 385. Yeah, I mean, in the morning it was 382. Now it's 385. So it's just like, you gotta take it as it comes. Tesla, it's resilient. It does not care. It does not care what's going on in the market. The Tesla shareholders are absolutely resilient in not letting Tesla fall. So Tesla is making its way to doing well. I'm investing for a lifetime, not a week, not next week. Wise words by Matt Money. But yeah, so I bought DNA today. I'm going to come out with a video on Monday explaining why I made this decision and how excited I am for this particular stock. Kathy Wood has over 100 million shares of the company. It's interesting to me. It's very, very interesting to me. And when someone buys 100 million shares of something, you take it a little seriously, right? You look a little bit. Also, when the market closes in like 40 seconds, I will not have a closing bell because I forgot it at my house. What I need to do is order another one that I leave at the office and another one at the house. For everyone who doesn't know, I'm at my office right now. So Chris is going to be very thankful today because his ears don't have to get burst by the bell. Amit, we doing late night stock tight tonight? No, we are doing Palantir Weekly tonight. Me, Chris, Matt Money, and probably Adam Bergen are going to be doing late night stock talks. Chris says, don't do it. You're going to lose credibility when they're bankrupt. They're not going bankrupt, bro. All right, Chris, you and me have to talk about it. I do not think this company is going bankrupt at all. Did you look at AUR, bro? I did not look at AUR yet. I really don't think they're going bankrupt, Chris. They raised 1.6 billion last year in an IPO. Like, I have to check how much they exactly have on their balance sheets, but I don't think they're going bankrupt. All right. The market is closed. Imagine I'm ringing a bell. Where's United stock at? My sister has a big position in United because she bought at 18 in 2020. So she's up on United right now. I haven't looked at airlines in so long. Remember when airlines were interesting during COVID because they got so decimated? Everyone thought like either they were going bankrupt or they were going to come back. I mean, we all knew they had to come back. But interesting. United at 318. Roblox. I haven't looked at Roblox in a long time. It's at $39. I'll be watching Late Night Palantir Talk. Awesome. That'll probably be at 11 p.m., guys. She also saw Palantir. She has good discovery, but bad holding skills. I agree. She does have bad holding skills. Shout out to 100 people being here. Appreciate it. Adobe stock is undervalued. I don't know. So Adobe, let's look at their price. This is actually a good stock to look at. It's like a case study to understand a little bit. Okay, so let's go to their max. Adobe went public in 1987. They have been doing software for about 40 years. Okay, so this has been a company that's been in it for a while. Let's go to the dot-com bubble. The dot-com bubble, Adobe got to 43 on their highest, right? So this was like November 30th, 2002. And then they went down to around 14 on their lows. And they got back to 43 about 3 years later. Actually about 4 years later, 2006. And so they started getting a bit more exponential in growth right here. 2012, they were at what is this? Oh, wow. No, they went even lower. They went even lower again. Oh, yeah, because then the Great Recession happened. Then they went back to 15 in 2008. Then they finally got back up to 42, which was their all-time high in the dot-com bubble in 2013. So if you've been holding Adobe stock since the early 2000s, it's not been a pretty pleasure ride. This is the sort of artificial, no interest rates kind of Fed liquidity period ever since around 2012. So 2014, they're at 65. And they keep gently going up, as you can see, up. And then right here in October 2020, they hit 536. And then this is their peak. So 500 from 20, nice, more than 10x return. Then they hit 700 November 30th, 2021. Okay, so they were $700 stock. From then, obviously, we've had a bit of a crash. And they went down to 390-ish, 380-ish, basically yesterday. And then yesterday happened and they went down to 292. So the market basically took off half of their market cap over the past 8 months. And then the market took out another like 24% of their market cap yesterday because they spent $20 billion. So the question becomes, is it undervalued? I think this requires an understanding of, outside of the fundamentals, a little bit more of the growth story of Adobe. They acquired a company that is the leading company when it comes to designs for enterprise and consumer-based applications. And product design is becoming more important than ever because people want to use good products. And if Figma is the place where that happens, and Adobe now owns them, there is a $16 billion total addressable market, as per the interviews that I watched, of the design space, not the Adobe space. Okay, I'm back. It left for like a second. I'm back. Okay, sorry about that. I'm back. So what I learned is that there's a $16 billion TAM for the design space, not just the editing and all that other stuff, but $16 billion just for design. And that's what Figma was going after. Figma is ending the year at $400 million of ARR. So theoretically, right, if they are the leading people, like they should be able to capture a far majority of that $16 billion TAM. And they're only a tiny way there. They're not even at $1 billion. They're not even 1/16th of the way there to be able to capture that TAM. If Adobe captures a majority of that $16 billion TAM after they're doing $13 billion a year, that's what, 16 plus 13, so that's 29, correct? 16 plus 13, that's 29 billion theoretically they could be adding, and they wouldn't get all 16, right? So if they did 13 billion ARR last year, let's assume they add, let's be very basic and assume they add $1 billion ARR because of the Figma purchase. So that's like 14 to 15. Let's call it 15 billion. They're trading at a market cap of 140 billion. So the price of sales is 9. You could argue the long-term potential and the long-term growth of the entire design sector UI space is going to be massive because consumer applications, enterprise applications are not going anywhere. And if Adobe is a leading market leader, when interest rates go down, inflation goes up, and things get better, 300 could go back to 700. Or even if it doesn't go to 700, it could at least go to like, just 400 based upon the fundamentals of their increase in ARR. I am just not excited about Adobe as a stock. That's the problem. Like, I just don't care that much about Adobe as a stock, or Adobe as a company. Like, I don't get excited by design and stuff like that. So that's why. Going back, DNA won't go bankrupt, but AMRS is better than DNA. Interesting. So I've seen some debates about AMRS as well. You're supposed to buy on a red day. Yes, that is true. AMRS I'm looking into. DNA is a little bit more exciting to me. But AMRS is something that I know a lot of people are excited about, especially in the synthetic biology space. So interesting. We're going to see. Amit, any thoughts on a Riot crypto miner? As a slightly less volatile crypto play? I just don't think crypto is exciting right now anymore. Riot blockchain. The only crypto product I would really be excited about is this stock right here, CleanSpark. There's a good channel on YouTube called Rex Finance. If you want to learn more about CleanSpark, I also did an interview with the founder of CleanSpark, or the executive chairman. I'm probably going to put that up on my channel. I should put it up today. I could probably put it up after this live stream. I've had it. We just never uploaded it for a while. They're a Bitcoin mining company, and they were an energy mining company that pivoted to Bitcoin. Their EBITDA margins are amazing. They sold Bitcoin at the top at 69K, so they got out right when it was right, and now they're getting back in. They are exciting to me, but that's Bitcoin mining, not necessarily some of the other blockchain plays. In general, I'm not a fan of crypto. Like, I just don't care too much about it. So it's never interesting to me. The decentralized movement is not that interesting either. Coinbase is only going to make money if Bitcoin goes up. Like, if you buy these stocks, you have to believe crypto is going to come back. And here's the interesting thing about think about the next bull rally. The next time we have a bull rally, I am curious if crypto is going to be as intense as it was. Like, think about NFTs. NFTs aren't even like talked about anymore. Like, no one cares about them. If you saw OpenSea's trading volume, which is the leading exchange for NFTs that raised $300 million in a Series C at a $13.3 billion valuation, which means if they need to go public, it would have to be at a valuation that's greater than $13.3 billion. They are barely getting any trading volume on their platform anymore because people don't care about NFTs. Why? Because NFTs were, in my opinion, a way to just make money on the upside, not really care about the communal equity of an artist. Now, is there use cases for that in the future in like things like music? 100%. I agree. But I also think a lot of the blockchain-based stuff is not that, it's not going to be that exciting if people can't make money on it. And most of the time, you're not going to be able to make money off of it. So CLSK trades at less than 2 price to sales. Not many stocks out there that cheap. I agree. And again, the channel that covers it is Rex Finance. Let him know I sent you there if you comment on any of his videos. Rex Finance, that guy knows a lot about this stock. I mean, he's kind of built his channel around this stock. So he understands it pretty well. Can you do a Tesla talk about your stock prediction and break it down by the revenue streams, Tesla cars, Tesla batteries, blah, blah, blah. Okay. I'm not that big of a bull on Tesla. The channel you want for this is Farzad. Okay. Farzad, just look him up, Farzad Tesla. He was an ex-Tesla employee. Some of you guys probably know him. That guy will give you all of the in-depth stuff you need about Tesla. I personally am not, I want to be more excited about Tesla, but at 303, I'm not going to buy it. Like, I'm just not doing that. So if it gets lower than this, then we'll see it if around like 250, 260 range. I am very bullish on Tesla because I love Elon Musk. In fact, I uploaded an idea yesterday. If you guys have not signed up for my startup yet, would really appreciate if you sign up. Link in the description. It's totally free. You can give me some feedback on the product. Let me know it works. And one of the clips is this Elon Musk clip will change how you think about the world. And it was a clip of basically Elon Musk saying, I should probably play it maybe a little bit later, but he was basically saying, screw it, we're just going to get it done. Right. And it was so inspiring to me. And I love that idea around Elon and just changing the world and the ability for them to have incredible margins. I agree with all that stuff. But Farzad will probably give you a much better like breakdown of all this stuff versus me. Solving the Money is a great Tesla channel as well. Yep. Solving the Money is a great Tesla channel as well. I agree. Okay. So let's, is that it on stuff? Adobe SPY 385. We ended, NASDAQ ended 11,480. So let's look at the 1 week on the NASDAQ. How bad was the 1 week for the NASDAQ? where were we on? Okay, so we were at 12,000 on the Nasdaq in the beginning of the week. Now we're at 11,316 on the SPY. Beginning of the week, we were hold on. Where were we? I think we were at 413. Yeah, here we go. 415. Or hold on, right here. We were at 408, 410. You call it 412, 411. So 411, right back down to 382. That's a pretty brutal week for the S&P, and that's where we're ending there. Nvidia closing above 130. That's nice. Where's Palantir closing? I'm gonna guess 750-ish, 770. Okay, cool. 750, 770. Not bad. Tesla ending at 303. Tesla stayed unscathed this week. It got through. Oh, Meta. I forgot to bring this up. Facebook is at levels it has not been since March 2020. March 2020. When you talk about a stock that might be cheap, I mean, March 2020. Let's look at the max right here. Look at where it's at right now. It was at 384. That's the high peak. You got Facebook right here. February 2020. It's around 148. Today, 146. 2 years later. It went through this big up and this major collapse. And so that is Facebook company right now. One could argue that this is a company that it's trading at 3 times price to sales. A company doing $120 billion in revenue is trading at 3 times price to sales. The only fear is just like, I saw an article today that Instagram Reels is not engaging. Like there were some reports that leaked from the Wall Street Journal that people don't like Reels. You guys know what Reels are, right? Everyone here watches Reels. By the way, if you're not following me on Instagram today, you need to follow me on Instagram at It's Amit Courageous. So these are Reels, right? This thing right here.
Hustling in Toronto.
Those are Reels. That is their competitor to this thingy, TikTok. And people just like TikTok more than Reels. So it's a little bit rough for Instagram kids to be able to get that engagement. What did you buy? I bought a little bit of SoFi, a little bit of Palantir, a little bit of DNA, and then a little bit of Google today. About 4 shares of Google. By the way, DRK, thank you for being here. Can everyone like the stream? That would help out a lot. I never ask for it, but DRK told me I probably should be asking people to do that. All right, let's go here. We're talking about the Chinese government and their economy. My Instagram name is at It's Amit Courageous. I'll put it in the chat.
Draws its full year guidance, announcing, as we said, a bunch of cost-cutting measures, including deferring hiring, closing offices, shutting 5 corporate locations. Jim, a lot of discussion about what this means in the context of some of the other warnings we got this week.
Yeah, I'm calling it 70-30. 7% of the problems here are macro. China, frankly, China is a disaster. Okay, disaster. Europe, man-made, obviously Putin there, not enough money after you pay your electric and your heating bill. Our country, slight slowdown. David, the cost structure here, as you have said over and over again, is out of control.
It is. And I wanted to talk to you about this, and I think it's so interesting. You just said 70-30. And because I have a number of people who would say, this is more about execution than it is about macro. They can blame macro all they want. European business, not good. The margin profile of the ground business in the U.S. is a disaster. The express miss was a profit miss, was almost equal to the entire profit miss. And are we really going to see this from UPS? Or is this more reflective of what, frankly, the activists had been talking about, that is a lack of execution on the part of FedEx?
Do you know how?
Obviously, macro plays a role here, but the question is how much, because a lot of this market is depending on the idea that this is not a FedEx problem.
Do you know how much time I spent on that 70-30, betting it maybe at 60-40?
Okay.
Never felt, I don't think 50-50 can't do that. But the reason why I think that I may be too low is that the actual revenues weren't that bad. $500 million miss, bottom line, not top. So I think, David, if he hadn't said
2-3 months later, look, granted, the economy has changed. Nobody's saying it hasn't. And certainly Europe, as you point out, and perhaps, and much more so Asia.
Well, how about each week getting weaker? Right. And I think that, and Carl, we got to talk about this. I don't think we can talk enough. I know there's some Chinese numbers that came out tonight. I don't care anymore about the government numbers from China. I don't think they're telling us the truth. It's a hard charge. But when I listen to what the CEO of FedEx says about China, it's worse than before the lockdown. It's worse than through the height of this COVID. What the heck is going on in China?
Right. So are you going with the school of thought that says if this were really truly macro, like mostly macro, we would have, plenty of companies have had lots of chances to say it last couple of weeks in conferences, aside from the Huntsmans and the Nucors and even the GEs?
Well, look, I don't want to get away. I mean, this is a macro story. It's a macro story because of China economy and flying planes to China. And as David's always said, maybe they got too many planes, they're flying them back half full. Europe is happening so quickly because these bills are mounting so fast. The U.S. was very hard. I pressed hard on U.S. to find out how bad it is. And it's not as bad. But they've got a lot to fix here, and they got to fix it fast. They got to fix it faster than I thought they had to. And they're doing it, unlike Carol Tomei, who did it when UPS was strong. They're doing it in a very weak environment, weaker than people realize. And I, at one point, said at the top of my show, is Jay Powell watching this? Now, David correctly criticized me that I was too glib. I meant to really just try to minimize on the conference call yesterday. I have club members. I said, look, when I say this is a good time for healthcare or this is a good time for soft goods, but if it really is buying services and not packaged goods, well, that's got great implications too. But David, it's bad.
This is really interesting for a lot of reasons. What Kramer was talking about there was FedEx, and FedEx is down like 20%, and FedEx is not a stock that's down 20%. And apparently the Chinese government has been saying that it's worse there than it was in March 2020. And that's where Kramer is like, is it actually that bad? Like, what are we really dealing with here? What's actually going on with the economy? Right? What's actually going on with a lot of these things that's happening? I don't know. I mean, this is interesting stuff. The China stuff is also interesting. Also, I got to show you guys this tweet. Don't know how. I mean, this is from a pretty reputable site, but I want to see if this is correct in some other respects. So here's the tweet. Chinese President what's this guy? Xi Jinping has told his military that he wants to have the capability to take control of Taiwan by force by 2027, per CIA Deputy Director David Cohen. So it's not coming from China, it's coming from our intelligence. But he does not currently believe that Beijing has made a decision about whether to proceed. This is the geopolitical ramifications that are incredibly important to discuss in this economy. And it's also, and this is why, the Palantir conversations are interesting, because they force the discussion around Western democracies. And this, if this happens in the United States is not stopping this. We are not stopping this because we're not getting into a war with China. So we're literally just going to let it happen, right? The only thing we can do is prepare Taiwan to deal with it, or put sanctions on China. And what does that do? That flips every company's supply chain overnight. Who's going to help? I think it's going to be Palantir. That creates an ideological, dictatorial wormhole that we're dealing with now, where other countries feel like they have the ability to disrupt the sovereignty of other nations like Taiwan. What do you need? You need, as what Alex Karp called, a slingshot that can protect your country and your sovereignty using software and AI and data against other dictatorial regimes, because the world is becoming less globalized. That is also where Palantir comes in. So, I mean, if this does happen, this would be pretty bad. And I think Palantir absolutely could play a role in helping it, but hopefully it doesn't happen, because if China actually decides to take Taiwan by force, they will get into a war with Taiwan, and they might beat them, or they might be beaten back by Taiwan if Taiwan has some competitive advantage around them. But we will not get into a war with them, just like we did not get into a war with Russia, because, well, they've got a nuke. And we don't want to mess around with a nuke. Ships from the USA and Japan are around Taiwan right now to head them off. Yeah, it's like, It is. China's a big one to watch. It's absolutely insane. I make it a PS5 so we can play Fortnite. But I haven't played a video game in like 15 years. Time for countries to get self-sufficient again. The worldwide trade has made many countries powerless. I agree with this. I also think worldwide trade, though, has created intercommunal, like globalized ecosystems, which have helped companies in the long term, or countries in the long term. It's created a lot of wealth and prosperity. But now it's going to be them on their own. So Russia doesn't have a nuke. They have the world's largest stockpile of nuclear arms. Isn't that the same thing? They have nuclear weapons. That's my point. Or do they have to make the nuclear weapon or something? China are jacking up their economy up in order to ensure Xi gets another term. Sound familiar? Well, we are going to see. Bad decisions have made some countries powerless. I agree. I absolutely agree. It's going to be one of those things that happens that's going to be like defining for forget a decade, but for a century, right? It's going to change the way we think about everything. It's going to change the way we think about globalized trade, globalized ecosystems. It's going to change the way we think about markets. And I mean, it's just going to change everything. So when do you think genomics like ARC-G will pop? Seems to be the future of medicine. It's going to be a while. It's going to be a long time. I think it's going to be like 5-6 years. But this is the time where you buy, right? Before it's obvious. What the DNA guy that I was listening to, the CEO, Jason Kelly, he was basically saying the way we program code on a computer, which takes 5 seconds to like start an app, is the same thing them and other companies are trying to do for programmatic synthetic biology within your DNA, because every cell in your body has a DNA that's encoded that can be programmable, which means you think about the App Store on iOS and how many applications are built on top of it, because it's like this layer that that facilitates the ability for people to build, or AWS gives people the ability to build on top of their compute storage database. That's what DNA is trying to do in the biological realm. And we haven't even touched a surface. The most we've done is we've made Impossible Burgers from that, right? Like we haven't done anything really special yet. And so there's such a massive opportunity in that space, but it's also going to take time because those drugs have to work at the end of the day. If China invades Taiwan, it will be a full-on Cold War with tons of cybersecurity threats and threats to supply chains. Palantir, Datadog, Crowd, buckle up. Data is the new oil. I agree, Josh. I agree with that. I hope they don't end up doing that, because that's going to be bad for everybody. But if that, I think that's what Karp was saying. Is she's like, look, it's inevitable, and if it happens, we have to be prepared. And I think I like him taking that approach, because that's how we felt about Russia and Ukraine back in January in that Kevin Warsh interview at Stanford. He basically was like, things can be bad, and it's really important to, understand that if these things are bad, then they're gonna be rough for a while. So. All right. I think that's it for me, everybody. Good 40 minutes. Thank you all for being here. This is ending my first week of doing the closing stream, the market open, and late night stock talks. Today will be the Palantir Weekly every single day for 5 days straight. Consistency always makes you feel good. You want to keep it going. You don't want to ever stop. You want to give people what they came for. So hopefully next week, same consistency there as well. Thank you, everybody. I think we had a consistent 100 people every day for closing bell, which is awesome. I know everyone's busy in the middle of the day, so the fact that you guys get to come in means the absolute world to me. And thank you for being in the market open as well. So good stuff, everybody. I'll see you guys if you come to the Palantir Weekly tonight. If not, have a great weekend. And I'll see you guys Monday. Bye-bye.